So I assume you're aware of most of the billionaires and millionaires made most of their money in a downturn and not in an upturn. So I want to share with you some few elements what you need to do now, because these days it's very hard. Let's take 10 years ago, whatever you're going to put your money on, you made money. So just dumb money. Just put money in real estate, stocks. Every dumb person, they have no idea, just make money. It's the same thing like what happened, 2002 to 2007. So they did in real estate. So what you need to do and what you need to focus on in order to go through these challenges. So the first thing you need to be aware of, it's a market volatility. And again, there are many type of markets. There are many sub markets. But I'm just talking about the markets you think they want to participate in. Because sitting on the sidelines doesn't work. Because, you can sit on the sideline with your cash. I'm not saying it's bad. But sometimes when you think you need to make a move, would you do this move or not? And it's very easy to say, I know when the stock market going to go here, I'm going to go in. But it's very hard to do it in the right moment. And then the stock going to go up, and then you're going to fear, of missing out, and you might go in the wrong time. What's going on now? So, the big players, the BlackRock and all this kind of stuff, open doors in the real estate, also they are hurting. They also spend, invest a lot in commercial, in offices, in multifamily, in industrial, in rentals, and they suffer a lot. Now the commercial space is going to suffer a lot. In my opinion, that's going to be the big thing. Again, lots of loans going to be mature in the next 2 to 3 years in the billions or in the trillions and of this kind of loans. And someone needs to buy them. And also the bank, they don't have any point to hold those loans because they're going to be underwater. So you need to be aware of that. And also the Fed doesn't really have a good plan what's it going to do with their money, right? What they're going to do with the interest rate. So they have they have lots of months of increased interest rate, and now they stop it a bit, and they're going to see, because there is a lag time between when they increase the interest rate and how does it affect the market. Because we haven't seen what's happened. We haven't seen a big unemployment. We haven't seen big layoffs. We've seen a bit, but just in the tech industry. But and we see that the sentiment is going down, and people savings level going down. The mortgage is going people are taking less mortgages. Mortgage applications going down. And again, the stock market is not predictable, right? There was a massive drop, and then all the indexes also almost came back to the top high, and now they're trending maybe 10-15% lower. So what's the next with the stock market? It's really high to know. So the next challenge that we have, and we're going to have in the next few years, it's the cost of capital. Again, the basic cost is to the household. So everything went up. The gas, the oil price went up. Is trending around the $100 per barrel. So everything is expensive now. Food is expensive. And even when the inflation rate is not that high like before, but the price doesn't come down. So again, if in the last 2 years everything went up by 15, 20 or 30%, it doesn't come down. Just even if we have a moderate inflation, the price stay the same. And then it slowly keep going up. So we can see that people are they don't have much savings, and they're spending more on the credit. I think with the high time, the consumer credit, because they have to spend this money to buy food or for shelter and everything, but they don't have enough savings to do anything. So if something very small going to happen, a divorce, a medical issue, or a job loss, the house can be crushed, and it's a very challenging things to be in. The next one is high interest rates, right? So again, people are using high credit cards, cost a lot of money. Also, all the home loans increased by 40, 50, 60%. And that's a lot. We don't know what's the next for the interest rate. Maybe it's going to stay like that for the 2 years. It's very hard to know, and I'm not sure even the Fed knows about it. And also I'm talking about investors, right? Investor in real estate. I think the investor activity in real estate went down maybe by 40%. In the last 2 years, when everything was easy, lots of new investors entered the market. And all these people that, like the Airbnb, all this kind of stuff. So over the next 2 years, all these people going to go away. And those amateurs are just going to sell it at a loss. So now we see, but even the big companies, they made big bets, and I think that they purchased a lot of assets in the top of the market. So the next thing you need to think about, what kind of investments are sustainable. Doesn't matter if the market is going up or down. Doesn't matter if it's the real estate market or the stock market. So you have to find a good sustainable and investing models for the next few years. Because again, like I mentioned before, like people that are doing flips, it doesn't work anymore. The stock market doesn't provide the long-term growth like it used to be. The bonds market is very high, so it's really hard to know. And again, putting your money aside, I'm not sure it's a good thing. And again, maybe people already in the stock market, but they're afraid to sell it at a loss and realize the loss. So what I personally like to do, I like mortgage notes. It's very simple, very easy, and it's very predictable. You can buy a note and you can hypothecate a note, becoming a private lender to a note investor like myself, and you can get high returns. It can be between 7 to 9% per month. It's going to be, you can be like a bank. And that's exactly what you're going to get, and you have your security. Because I used to invest in a lot of many things in the past, and I was aware of the idea of, having a security for your principal. Again, when you are buying a house or when you are buying a stock, if the product goes up or down, there's no security for your money. So you just lose your capital, and it's very hard to bring the capital back. Again, if the stock goes from 60 to 50, you just lost a lot, like almost 20% of your funds. Because also buying a rentals, maybe there's not going to be any capital growth for the next 5 years. And also it's very hard to find a cash flow property because of the high interest costs, insurance costs, taxes, and also the quality of the tenant. Is very hard to find good tenants now because of the financial uncertainty, because someone can lose your job, someone can, stuck in their home, someone cannot pay your rent or trash the house before they move. So I'm not sure buying a rental, it's the right thing to do, okay? Because again, if you're buying expensive home, they're not going to yield cash flow. And of course, some people like to buy a commercial, but it's very hard to find those multi-families, that provide cash flow from day one. It's very hard to find them. And of course, if you're able to find them now, they may be a good idea for the future. The next big challenge is economic uncertainty. So I'm from Israel, and just recently we had like a horrible war with Hamas, with those Arabs. So we had a horrible war. More than 1,200 people died and more than 100 kidnapped. And this is crushing our economy. Many people are going to serve in the army. Schools are closed. All the local businesses, they're doing nothing. All those funds allocating to this military effort. Stock market goes down. Our currency is very getting weak and weak against the US dollar. So there are so many things it's out of your control. So how can you also hedge against this kind of stuff? And of course, I live in Israel, but I'm doing everything in the US, but everything can happen everywhere. Like Russia and Ukraine, it's another war. Like there is a trading war with China. We didn't know when external factors gonna come into place. What about the oil? Also, there are some this close group of countries like Russia and Saudi Arabia, all this kind of stuff. They are rich with oil, and they're affecting the US with the oil price. So they're actually controlling the oil supply. So again, you need to pick something that first you know what you're doing. Second thing, the external factors are very minimal. The external factors are very minimal, and the chance is very low that you're going to be affected. That's why I like mortgage notes and land notes, because it's very, very simple. It's very protected against external factor. You are hedged against any external thing that happen in the real estate because you are buying so low. Usually, I like to buy notes that my loan to the property value is about 65%. So if there's gonna be a collapse, in the real estate market for 10, 50, 20, 30%, my principal is still gonna be covered. So I hope you learn how you can, take advantage and how you can invest even during these big challenges today. See you on my next video.